Hey guys, Joel Frank here, market analyst for YouTrading. In today's video, we're going to be taking a quick look across markets, talking about what's been happening so far this week. I think perhaps a good place to start is probably the calendar, because maybe not the Forex Factory calendar, we'll look at the investing.com one, because we've had a couple of important data points today. First of all, we had some inflation out of Germany. You can see the German national CPI figures were released hotter than expected on the year over year, hotter than expected on the month over month, pretty much across the board for the CPI and the HICP, the Harmonized Index of Consumer Prices, which is the ECB's preferred gauge over the CPI. So that actually has triggered a bit of downside in the Dixie as a result of a spike in euro dollar. You can see here euro dollar is about 1% higher. And this isn't a dollar move. Like if you look at cable, you can see cable's flat. This is a euro driven move as traders up their bets on, on ECB tightening. So that giving the euro a bit of support, keeps pressing to further highs on the week. The Dixie continues to pull back, although, I mean, we're still not too far off these recent highs. And technically speaking, yeah, we're only about 1% off the recent highs. Technically speaking, I think the bias is still towards a continued grind higher towards this resistance area in the upper 105s. But back to the calendar quickly. We had some interesting US data today as well. Let's see if I can locate it. Where's it gone? There it is, ISM manufacturing PMI, excuse me there, wasn't able to find it. So you can see here the headline manufacturing PMI pretty much in line with expectations, pointing to the fact that the US manufacturing sector in February is struggling, is in slight contraction. But the thing that caused a bit of alarm here was this unexpected or much larger than expected jump in manufacturing, the prices paid sub-index, which has now jumped back above 50, which basically shows that rather than fading, price pressures in the US are once again building. Now, this hasn't been enough to spur strength in the dollar, of course, as I've just shown you. But if we have a look at the S&P 500, you can see it's under a little bit of pressure because, today's data showed, a weakening economy, but inflationary pressures that remain persistently high. You've had various Fed members coming out and continuing to be hawkish, continuing to talk about interest rates going above 5%. You've got markets pricing in a terminal rate of about 5.5% now. So these are themes which continue to weigh on the US stock market. And you can see here the S&P 500 just hovering above its 200-day moving average there, which is the green line, and just hovering above this downtrend from 2022 that we've been talking about for feels like forever now. For now, the medium-term technical bias remains okay as long as we can hold above these levels, but that's a big if, of course. We've got further data coming out in the next couple of days and weeks, like the ISM Services PMI, like the US Jobs Report. If the Services PMI is hot, like the last one, if the Jobs Report is hot, like the last one, that could continue to lead to upside in the dollar, upside in yields, upside in Fed tightening expectations, continue to justify the Fed's sort of hawkish commentary about interest rates needing to go to 5.5%. And we could potentially see a break back below this support area. Now, if we go below this 200-day moving average, 100-day moving average, and this trend line, I think the door is really open for a slip all the way back to this 3,760 sort of support area down here, because you got to remember the most recent earnings season, which wrapped up like a couple of weeks ago, was strongly hinting that, or strongly pointing to the fact that there's going to be a earnings recession later this year in the US, if it's not already in the early stages of beginning. But anyway, what else have we had this week? Let's just jump back to the calendar. You can see we had some things like Aussie CPI and GDP, both a little bit softer than expected. You can see that we had Canadian GDP tiny bit softer than expected. But yeah, really the main thing has been that Eurozone inflation and this US ISM. Now, what we got for the rest of the week? Well, we got the Eurozone aggregate CPI data tomorrow, but it should be hotter than expected because Spain was hotter, France was hotter, Germany was hotter than expected. So you'd expect it to be the same for the aggregate Eurozone one. Bit of Fed speak. Fed's governing board member Christopher Waller speaking, and then ISM Services PMI. Like I said, these important US data points coming up, which could continue to feed into these themes of inflation remaining hot and the Fed needing to do more. But yeah, let's look across at a few other asset classes. Like yields have been pushing higher in the US. You can see the 2-year is recently pushed to its highest, actually. Let's get it on a monthly, since all the way back to July 2007. That was today. The 10-year yield briefly went above 4% for the first time since November. That was, if you look at the 10th of November, that was actually a big downside US inflation surprise, which really got that US deflation narrative going, which obviously now has largely unwound. Gold actually doing surprisingly well, probably because of the weakening dollar. But like, usually when you see yields pressing high like that, it does weigh on gold. But like I just said, the dollar coming off highs a little bit, and the dollar is very important for gold as well. Oil doing okay. Another thing probably to talk about, if I just scroll a little bit further up, you can see it had some Chinese PMI data for February, which was pretty much stronger across the board, very much in fitting with the China reopening narrative. China's economy doing better than expected as it finally departs, or in the last couple of months has finally departed from that very stringent and economically damaging zero COVID policy that they had in place for like 2.5 years. But oil potentially eyeing a bit of a breakout from this pennant structure that's formed, which could open the door to a test of this 82 level for WTI. But yeah, guys, that's pretty much everything that's been going on so far this week, and all of the things you need to be looking at for the rest of the week. So I hope you all enjoyed the video. I hope you all found it informative, and I will see you all in the next one.